Good morning, everyone. Welcome to Daily Trader with Kevin Hincks. I'm Kevin Hincks. We have two trades for you today, two paper money practice trades for you today to look at, one in Nvidia and one in Apple, and ironically, two different directions on these trades. So let's get right to it. First, Nvidia. Now, the bears in Nvidia are getting louder as we get into the end of the year and profit taking. And make no mistake, Nvidia, that's had an incredible year. It's up 168% in the last 12 months. But, however, in the last 1 month, down 10%. It hit a high of 152.89. It was below 130 this morning. So, the questions about AI, the questions about NVIDIA's valuations are getting louder. We're getting to the stage in AI where there's going to be winners and losers. Now, doesn't mean the stock can't go down. Doesn't mean AI can't top out and sell off. Look at Netflix when streaming. Went to $700, went to $175 before back up. But the question is, where are we in the AI transformation? And a lot of people think it's still very early. So there's part of the way we're thinking. And then financials at NVIDIA, robust. Revenue growth, exceptional. Profitability, yes, extreme profitability. Cash flow, strong. $20.21 early this morning. It was worse off the lows, off the recent highs lately. So NVIDIA has dipped. It's below its 50-day moving average. And so what we want to do is slowly but surely participate on that and get ready for a recovery in NVIDIA. So the practice money paper trade that we're doing today is going out to the January 17th, which is 28 days, 4 full weeks from today, and buying the 130 call. The at the money, slightly out of the money to start the day. Now it's slightly in the money as NVIDIA is rallying. Buying the 130 call, selling next week's 136 call in line with what? The expected move for next week at about $7. We're almost $8 now. We're inside that. You can change that strike if you think NVIDIA can go higher. It certainly may. It also may go down. So we don't know. So what I chose to do is $6 in a week is a nice rally. 136 would be a nice recovery for NVIDIA. So I did the 130, 136. It was, look, we set it in about 620. It's trading about, here's the thing, it's trading now over $7 on this trade. So the 130. Now, maybe you want to adjust your strikes based on where we are now, but we're looking at the 130, 136 for around 620. That's trading a little over $7 right now. So in terms of the price slices, it's got about 25 long deltas. It's collecting about just under $7 a day in theoretical theta. It's long Vega. So there's one risk. NVIDIA's implied volatility is a little high, but remember, that movement will help you on the upside if you get that move. Volatility may come down, but the overall delta may rise, which will take some of that Vega risk out of that trade. So a long diagonal. Remember, the fact that you've got 28 days on this trade and 7 on your shorts gives you that ability to extend duration on that trade and roll options from next week into the following week, like we're doing on days like today. If you're trading options, today's the day you do a lot of rolls. So there's the bullish trade in NVIDIA going against some of the grain. Now let's get to our second trade, and that is Apple. Now, Apple is an interesting story because the stock, is recovering today off its recent lows. It was low today about as low as 245. Now it's 249.50, looking like it wants to go back over $250. The rally that you've seen on the chart in Apple since the summer has been nothing short of spectacular. However, the fundamental growth that should come along with that just isn't showing up yet. Now, they still may have a good quarter with upgrades from the iPhone 15 and 16 and Apple Intelligence, but it appears like some of that's losing steam, and they've got a big high bar to get over to justify a valuation that currently sits above a PE of 41. That's an incredibly historically high valuation for Apple. This stock, Apple buys a lot of its own stock. It's got big institutional support. It's probably in everyone's portfolio one way or another via indexes or outright holdings. But you can't argue with the fundamentals in this stock that are not growing as strong as the price has grown. So for a trade in Apple, what I looked at is going out to the January 3rd, only 2 weeks. January 3rd gives us 14 days from today. Selling the 252.5, 257.5 call vertical, right? And now it was trading about $1.10 credit. The stock has rallied off its lows in the last half hour. It's trading about $1.50 credit now. So you can sell this spread for a little bit more. Remember, the risk on this spread, it's a call vertical, which is both are in the same expiration. You have 2 weeks to go to expiration. It's a $5 call vertical, which are whatever you're taking in. Let's say if you take in $1.10 or $1.50 credit, the risk on the trade is the $5 minus whatever credits you take in. So if it's 110, it's 390. If it's 150, it's 350 is the risk, right? The risk is, and the break even is the short strike plus whatever credits you take in. So if it's 150, the break even is 254, right? 252.5 plus the 150. If it's 110, like we show there on the screen, it would be 253.60 on that trade. Again, you're collecting theta. You're short about 20 deltas on this trade, but you're short Vega in Apple. So this is one that 3 of the 4 scenarios, this could be profitable, which is if the stock stays right here, this is profitable. If the stock goes down, it's profitable. If the stock goes up very small and doesn't make it to 252, it's profitable. The one scenario where it's not profitable is a move through the 252 strike, through the break even, and all the way up towards 257.5 is where this spread would be unprofitable. So it's a short delta spread in Apple, a long delta diagonal in Nvidia, one bullish, one bearish, both collecting theta, both risk defined. So that's our show for today. That's our daily trader for this week. Have a great weekend, everyone. We'll see you Monday with another edition of Daily Trader. I am Kevin Hincks.